Alright, I haven't brought this chart up in quite a while, but I think we should look at it right now. Okay, this in the blue is the dollar yen, in the red is the S&P, as you can see to the left. Okay, so if you guys remember roughly 3 years ago to this date, gold prices were at an all-time high, hit roughly 1920. The dollar yen was at 76. So that meant that the Japanese yen was a much stronger currency where compared to right now. Right now, the dollar yen is 107, and the dollar was much weaker against the yen. Keep that in mind. So high gold prices, the market was around 1200 on the S&P. All of a sudden, Fukushima happened. There was the yen carry trade on steroids, and then boom, market goes up, dollar yen weakens. Long story short, the signs behind this is that number one, the Japanese central bank continued to push more liquidity for the past few more years, and as a result, since their interest rates are much lower than the United States interest rates, they take the money, borrow in yen, invest in higher yielding securities, such as the U.S. stock market. So people talk about market manipulation, this and that manipulation. This is the manipulation they should be looking at, and it's via the central bank from the Japanese or the Japanese central bank and the United States central bank, the Federal Reserve, acting together to try to push markets higher, and in turn they got the gold prices down. People talk about gold manipulation. That's how they manipulate the price of gold. And this is how they manipulate the market higher. So you could see this for the past 3 years, where this dollar yen continues to go up, up, up. Stock market going up a straight line. Yes, you did see a bottom in 2009 for the S&P over here, right? But now I want to show you the dollar yen chart right now. Okay, so if you want to go back to early August, right? Gold prices, it looked promising at that moment for many. And then if you wanted to look at the Dow, right? It looked like it was going to lose more ground. It was at 16, a little less than 16.5. And then all of a sudden, out of nowhere, you saw the yen carry trade on a roll. It goes from like 102 to 107, just like that. In the meantime, gold prices have been falling, and the stock market, it was slowly but slowly going up. It got to 17.2. My reasoning, it went up because of the yen carry trade. But what was really interesting, I don't know many people found this headline, but the Japanese economy contracted at 7.1%. We could look at that right now. Alright, so I found it really hard to believe, but I found this actually off of Drudge. The economy from April to June contracted at an annualized rate of 7.1%, and the reasoning is they hiked the sales tax, right? One of the reasons why they probably raised the sales tax is because they were scared of the potential consequences of Abenomics, of all this money printing. So they raised sales tax. And initially, we could go back to the chart over here. I thought that the yen carry trade would actually unwind and we'd see it go much lower. But all of a sudden, it's just been going up, up, and up. Now the question remains, where is this going to go? Right? This yen carry trade. We notice that people in the trading markets, they viewed the Japanese data in a negative fashion because they are dumping yen, buying dollars right now. That's the trade right now. And also you have the Federal Reserve meeting. That's something to note as well. Or you're going to have an announcement from the Federal Reserve saying, hey, we're going to raise rates, we're going to lower rates, whatever. It's most likely raising rates. So you see the Dixie at 84, you see the dollar yen at 107, and what's interesting is that now there appears to be a divergence between the dollar yen and the stock market. Could it be short lived and you could see a positive correlation between these two markets again, or between these currency markets and the equity markets? Sure. You could see it continue after the announcement on Monday or early next week regards to what's going to go on. You're going to raise rates, you're going to keep rates at zero, are you going to unwind the balance sheet? We're going to get more clarity next week, but this is one of the observations I have been making, is that the dollar yen continues to go up. A lot of currency traders are losing faith in the Japanese yen after those abysmal numbers. Right? So much for money printing from Japan. So, long story short, next week should be an interesting week, and we should look at the dollar yen versus the Dow, and also the gold prices. There are a lot of people saying that, hey, gold is going to crash, this and that, but then some contrary indicators saying that, hey, everyone hates gold and silver as of this moment in this trading range. Maybe you may see a reversal in the gold prices, and you may see the yen carry trade unwind. We shall see. Anyways, guys, what do you think is going to go on with the equity markets, the price of gold? No one really talks about the yen carry trade, but if you want to add your topic in regards to that, please do so. And then, what is Yellen going to do, right? Keep rates at zero, start to unwind the balance sheet. I mean, it'd be a sloppy unwinding if she really does that, but it has to happen. Leave your thoughts, guys. I'll talk to you later.